Let me just check the microphone. Starting from the daily time frame, Friday was a huge down day. That was the high. It basically made an outside candle. So the whole week was contained within the last close of Friday. So it was a big range day, not range, a downtrending day. So we got a closing below the 20-day period moving average. We got a closing below this white box, which represents the monthly opening gap. Monthly opening gap, we are going to mark the previous day high, previous day low. We are also going to keep an eye on the 50%. So this line, which is 600.49, is 60% of the last candle, the Friday's close. We are opening right around this 600 point. This is the pre-market level. So I have marked this 50% along with other confluence as 600.03. So we have the previous day high, the previous day low, the previous week high, the previous week low, and 50% and the 20-day period moving average and this gap. So let's come to the hourly time frame. We have marked four important key points. That was the previous day high, the previous day low, basically Friday's high, Friday's low, Friday's. Then we are going to mark this gap, which is the start of the September, October. This gap is represented by this box. On the pre-market, we are trying to open above this line, which is 600.71. On but we are going to take some reference point on the hourly time frame. This is QQQs. On the hourly time frame, I am using this line, 1 hour 20 period moving average, and this line will be represented by this reference point so that I can look for this line on a smaller time frames. So on the hourly, we are going to mark this line, which is 602.83. Let's come down a smaller time frame on the 5 minutes. On the 5 minutes, on the pre-market, this criteria is going to be very important. I'm gonna write it there. This TM line represents a swing trading opportunity. TM line term swing trade. The criteria for this line, or the 50% of the Friday's range, and this white box, all of these confluences are going to tell me whether we are going to move higher or lower. Everything will be determined by these three lines: the hourly 20 period moving average, the 50%, and the 20-day moving average. These three lines represents this range. So I have marked these three lines. We have approximately about 8 minutes until the market is going to open. Bulls want the market to open and gap above 600. Bears want the market to stay below this point, and this gap, so that they can. Bears want something like, if we open below this 50%, we can easily come up to this point get rejected and move lower. But I'm more biased towards the upside. I'm more biased towards the upside. So we have our chart set on the 5 minutes on the cues. Let's take a look at the electronic trading hours. On the electronic trading hours, let's go to the daily time frame and mark the same important key levels along with some other important key levels. So first thing we are going to mark is the new week opening gap. The Friday's close was 24,009, and on Sunday we opened at 516. So from this point to that point, we are going to draw a range and call it the new week opening gap. So this should be on your chart. The next thing which is important is the previous day high, the previous week high, the previous week low, and the previous day low. These are the things which are going to be important for every single day. Every single day, whenever before the session starts, we have to mark these extremes. So now that we have the high of Friday and low of Friday, let's come to the 4 hours time frame and do a close analysis. What is a close analysis? Close analysis gives us a confirmation of a directional bias on, generally speaking, a higher time frame. Depending on where the bias is, I'll be taking long or short and framing risk to reward along with that point. So on the 4 hours, the last validating candle was 1 p.m. This candle was validated the moment we got closing below the prior bar low. This was the last validating candle. After the weekend, we gapped up, we opened, and we got a validation. We invalidated this candle and closed above the prior bar high, invalidating 1 p.m. candle. So, all in all, it makes two scenarios. The first scenario is either we are in a range. The second thing I'm thinking about is either we are going to go up or we are going to chop around. So, now that thing is established. From the 4 hours, let's come 3 standard deviation down to the hourly time frame. On the hourly time frame, this price was, we have seen, we invalidated the 4 hours candle. This was the invalidation on the 4 hours. We got 3 bar micro channel, 2 pushes down, and we got a second leg. Can we consider this as a first leg, a deeper retracement? Can we get to 24,800? This is what I'm generally thinking. Reason being, the reason is, we will see the main reason on the smaller time frame, but let's just mark 3 or 4 important key levels which will be played out. The first important key level is, this is basically a standard deviation on from the previous day 50% range. That will be 24,793. The next two lines which we are going to mark on the electronic trading session, which is equal to the regular trading hours, these are the two important levels which will make or break the market. The first one is 24,702. The first line 24,702, the second thing 24,641. These two lines are the breaking, basically a backbone for the uptrend. As long as we are within or above these two lines, I am taking a long, putting my stop loss beneath 641 or the monthly open. You can easily see this white line represents the monthly opening gap. So on the electronic trading session, this line is the monthly candle. This line represents the monthly candle. For example, for visuals, we opened here on 1st of October, we moved down, we moved up, Now today is 13th of October. So this is a single candle. Move down, moved up, we move down again, and we are basically on the monthly time frame. We are making a doji candle. You can see it like this. See this? The white line represents the monthly open and the close. We There was a gap between. This is the monthly candle. The last month closed at 6:11. We opened at 6:15. So there was a gap. This gap will be denoted by these two white lines, so that we can look at these two white lines on a smaller time frame. So coming back to the hourly time frame, now that you have seen it, right? So coming to the hourly time frame, these three lines, all in all, represents bulls. If we fall below these three lines, I am not interested in taking a long. This is a key information I'm just telling you. Beneath 641 or beneath this monthly open, I am not interested in taking a long. I'll be more interested in taking a short or do nothing. But if this price on the hourly, how much time do we have on the hourly? 30 minutes. Okay, let's see how we are going to open. This was the criteria, right? Bulls need the price to open above this point within the next 20 seconds or above this line. Okay, let's come to a smaller time frame. I hope my criteria is clear for you. Bulls want the price to stay above 641. We are open. So what do bulls need? Bulls need the price to stay above this long term swing trading reference point, which is 603. Bears, like, they are really desperate. They need the price to stay below this point so that they can gain momentum to the downside and continue, make some sort of a third leg or something. But I'm more biased towards the higher time frame, and on the higher time frame, where bulls are generally gaining strength. Okay, so now that the market is open, I'll tell you my criteria for the first opening range trade. Depending on how the first 15 minutes will close, there is a setup that develops after the first 15 minutes close. Once the first 15 minutes will close, for example, if this bar closes as a strong bull bar, something like, if let's suppose if this bar closes as a strong bullish bar and we get another strong bullish bar, this price point will be used as a floor for my stop loss, and I can take a very strong risk to reward swing trade. Worst case. The second thing I'll be looking at is a scalp. I'll take two trades. One I'll not close. The second one will be closed depending on the first 15 minutes range. So first 15 minutes I am not allowed to trade. I let the opening range develop by itself. Once the opening range is developed completely, then I'll take, for let's suppose this is the opening range, right? I will, what is the range of this bar? It's 100 points bar. Depending on how the 15 minutes close, basically 5 minutes candle close at 9:45, I will be targeting a second leg of this breakout. So let's assume this is the close on the 15 minutes. I'll be risking 50 points to get 60 points, basically 1.1 risk to reward ratio for the scalp narrative. The second one will be a swing trading setup that will be closed basically 2 or 3 days after, or once we move to this point or something. So narrative is clear. Let's drag this to this point. So We do not have a messy chart. So it's better to not assume any directional bias as of now. Once the 15 minutes will close, that will determine how I will place the trade and in the direction of the trade placement. For example, if we move and we stay below 641, I am not interested in taking a swing long nor a swing short. I'll just take a scalp short and just call it a day until we get above 641 again. 933, first bar is about to close as a strong bearish bar. This white box represents the monthly opening gap on the regular trading hours. So we are bouncing off the 50% of the regular trading hours. Keep things in mind. What does this line represents? This line represents 20-day period moving average. Okay. This line represents 20 period moving average. We might retest this point, then bounce higher, or let's see if we open below overly 20 period moving average. We are getting rejected out of this point, so bears are winning as of now. What did I mention? Bears need this bar to stay below this point. They might get rejection out of this point. Bulls need the price to stay above this point. This is the breaking point. This is end all be all of the basic trend. So as I am more biased towards the bullish side, I might take a scalp short, but I am more interested in taking a swing long, or basically a good risk to reward trade. So that will be much better if we get above this point, so I can use my placement or floor for my stop loss. First bar was a strong bearish bar. Can we get us a single standard deviation projection takes us to 596.02. First 15 minutes I'm not allowed to trade, just clearing that out. So regardless however the strong trend it may seem, but I'm not allowed to trade within the first 15 minutes. Once the initial range is developed, then I'll take a long or a short depending on where it's going to break out from the range of the 15 minutes. We opened above the 520 period moving average. Bouncing off the 20-day period moving average. For a higher time frame reference, it would have been ideal for bulls to get overly closing above 641. We still have 22 minutes until this hour will be closed, so bulls need to be strong. Bulls do not want to close below these two white lines and 641. If bulls somehow get strong again, move above and close above this point 641, I'll be happy to take a long. aiming for 1 to 5 risk to reward for the swing trade, and for scalp, I'll be taking 1 to 1 risk to reward ratio. The second bar is about to close in 1.5 minutes. We have 21 minutes until 10 o'clock, and this overly close. Bulls want the price to stay within this range above 20 moving day period average and above this point. Bears want the price to move below this level and close the gap from yesterday. Let's assume if we start to close the gap, which is basically low probability because the complete gap is about 500 points. This gap is 500 points. 500 points. So either we are ranging today because it's a low probability overall that we might get basically 500 points within again. Okay, now that you understand what this reference point is being used for, I'll just drag it backwards. This blue box basically represents the opening range gap. The second bar was a doji bar. It's 9:40 now. I am waiting for third 5 minutes candle to close. Once this 5 minutes will close. Okay, is it a strong entry bar? It's a weak entry bar for bears. So bears are disappointed. Let's go down to 15 minutes. How much time do we have till the 15 minutes will close? We have about 3.48 seconds until the 15 minutes will close. Depending on how this close, it will tell me a lot of things. The first thing is going to tell me that if you are expecting a swing trade from the open, you might not get it. You might expect some sort of a range if we get a closing below this point. So I'll be taking a short, but a scalp short. If we move above 641, then I'll be happy to take a swing long. So we are very close to basically making or breaking the trend. How much time do we have? 3 minutes. 15 minutes till close. Bears are trying to move below 20-day period moving average. So in order to not get confused, I can just delete 20-day moving average or this point and use this gap alone because these three are in confluence with each other. So first bar of the day on the 5 minutes has a 20% chance of being the high or the low of the day. So we have taken out the low of the day and 80% chance of being the range bar. 80% chance of being the range bar means we can easily take out the low and the high of the bar. Okay. The bulls are gaining strength. Bulls never wanted to get a closing below these two white lines. So we are not getting a close below the bear, as from the point of view of bears are not strong enough to get a close below these two white lines. We might move above this point. Okay, so the 15 minutes about to close. This color, yellowish or orangish color, represents the 15 minutes opening range, right? These things are I don't change these things, so if you're a regular viewer you should understand this point. So this blue box represents the opening range gap or any sort of a gap. So this gap, this is a gap, this is a gap, and this line, this box represents the opening range gap. So just for reference, we have 43 seconds left. If we get a closing above 641, I might take a long. So what was the range of the first 15 minutes? The range on the first 15 minutes was about 119 points. 119 points. We have closed this gap now. Let's go to the even smaller time frame. If we move above 641, I'll take a long position. First 45 minutes closed. First 45 minutes closed. A single standard deviation of the 15 minutes range takes us to 777, and half of that takes us to 720. And single standard deviation projected downwards takes us. Okay, now that we have our opening range set, just give me a minute. Just give me a minute. Okay. I'm taking a long position. I'm trading half of my lot size. If we move below these two white lines, I will close this trade. My usual lot size is 6 contracts. So I'm taking three. I might add on to my position once we move above 664. To define my risk, I am this should be good. This trade should be good. So there are parts to this trade. So I cannot execute double trade on this position. So I am taking another scalp long. This represents the three swing trade. The scalp trade is basically one risk to reward trade that is going to cover my stop loss for the swing trade. So I am not interested in taking a I'm not interested in letting the scalp run. So these are two positions. The first one is the scalp position. The second one is the swing trading position. Swing trading position is basically letting this market run as far as it can. The second scalping position will give me about 64 points and I'm risking 64 points. Bulls Bulls got a within the next basically 3 minutes. We need Bulls need to close above this line, this yellow line. If we get a closing above this yellow line, we have a lot of confluences. The first confluence will be we will have a 3 bar micro channel. We will get some sort of a second leg out of this 3 bar micro channel. One risk to reward, 1/1. Swing trade will give us about how much risk to reward on the swing trade. One to four risk to reward. We have 46 seconds left till this 5 minutes will close. Once this 5 minutes will close, I'll have the confirmation that we might get a second leg out of these 3 bar micro channel. The first confirmation we are getting is we are getting a closing above the opening range. The second is we got a closing above 641. So as long as we are above 641, bulls will try to push the market higher and higher. This 641 level, from my point of view and bull's point of view, represents the backbone of the uptrend. So as long as we are above this point, I am generally more interested in taking a swing long. Bulls try to get a closing above this point. We failed. We have 5 minutes left until this hourly candle will close. So this is key for this trend. Bulls want the close above this point. Bulls strongly need the market to close above the prior bar high, which confirmed downwards. I'm gonna mark it slightly. Okay. Bulls need the price to stay above this black line. Otherwise, no deal. So on the scalp trade, I'll be getting out at 1:to reward ratio. On the swing trade, I'll basically let it run for 2 or 3 days if it allows me to. But I'm covering up for my stop loss, taking the scalp. Within the next 4 minutes, the hourly candle will close. Once the hourly will close, basically within 4 minutes, I have either I'm gonna get stopped out, either it's gonna take my scalp position out, take my hit profit. So after that, for the swing trade, I'll just let it run or close this stream and just let it run. So basically, what this channel is dedicated for is this scalp trade, this system. I stream for hour and a half every single day after the open, and these streams are, or for generally speaking, this my second channel. This channel is dedicated for to get as much data on this specific setup as much as I can. Swing, not the swing setup, the scalp setup. So since it has a very high win rate, I like to basically execute it live. And for the scalp setup, for the swing trading setup, swing trades are rare, are really rare. They might come once or twice a month, or once or twice every 3 or 4 months. So that is separate from what I'm doing here. We have 2 minutes. Can we get a retest of this point? If you haven't forgot, this point represents hourly 20 period moving average, right? Give or take, right? This was the last close. This is not stable yet, so it's gonna move. So this will be the point I'm taking reference of, 602.82. We have 31 minutes until the hourly candle close on the regular trading hours and 1 minute left on the electronic trading hours. Okay, now you'll see how the market will play out with this. will understand what I was talking about. 702 and 641 are key important levels. For example, if I somehow forgot to place a trade around this area, the next zone will be to buy around 702. It's gonna be tough. You have to bear it with a basically a bigger stop loss, or but still this price can be used as a floor 702 to take a swing trade for 20 seconds. 20 seconds until the hourly will close. We have 4 bar micro channel now. New candle on the hour. This is the new candle on the hour. We got a strong closing above the prior bar low or the validating candle. This was the last validation on the down close. We got a validation above. So it's all coming together now. Is You can make some assumptions. Is the market making an expanding triangle? As it was making an expanding triangle on the higher time frame, you see this point. The reason we got a strong down close Friday was because of the expanding triangle. It made this symmetry and broke this symmetry in an instant. So now it's doing the same thing on a smaller time frame, isn't it? Let's come back to our original time frame, or 1 minute. Okay, for the 1 minute, my scalp setup has performed excellently. It was beautiful. I am closing this trade on my brokerage account here on one risk to reward, and I'm letting this scalp trade run. I'm letting this swing trade run. So my target was achieved right around this point. Okay, thanks for watching. Hope you liked the video. If you get some information or something useful out of this video, give it a thumbs up, and I'll update you on this swing trade maybe tomorrow. Might take some time to figure itself out. Thanks for watching.